All right, everyone. Marco Palmero, founder of Ulysses in Dubai. In this video, All right, everyone. Marco Palmero, founder of Ulysses in Dubai. In this video, I will discuss with you 5 key questions I always ask when I'm making a preliminary assessment on a business or an asset that we're looking to purchase with my company, Ulysses. Now, I want to cover this topic because I've been asked many times by clients and other people, what are some of the criteria, some of the metrics that you use to ascertain an opportunity early on? And the reason why I got asked that question is because many times people look at potential opportunities that end up being not good, but they cannot tell that early on. And so they waste a lot of time going through the process of due diligence and analysis without realizing that they could figure that out early on in the process. And so I just want to share my personal experience, 5 things that really helped me make my initial assessments and facilitated my due diligence process later on. And these things, these questions that I generally ask are very basic, but they are very important to us as Ulysses, and they represent some of the metrics that we use to ascertain whether or not that business is worth buying, at least for ourselves. The point I want to make here is that you will want to define your own criteria. You might have different criteria depending on your thesis, your interest, and the industry you're in. Those are not supposed to be fixed criteria that you must follow, but just the guidance of how we approach this process so that we can streamline our due diligence later on, and hopefully you can get some value out of it and maybe take some of the things that I'm going to share with you and use it for your own benefit. So what is the first thing that I always want to know? Well, what is the age of the business? With Ulysses, we target companies that must have been in business for a certain period of time, and without that being ascertained early on, we're just going to waste a lot of time because we're not going to be respectful with the owners, because we're not going to buy the opportunity, and we're also going to analyze a deal that is not worth doing for us. So for us, age of the business is something we want to be aware of early in the process. If that box is checked, then we can proceed with further analysis. Now, subsequently to that, we dive a little bit deeper into the technical aspects of the business, and we talk about employee count, which might sound like something that is not necessarily useful for a lot of people, but for us being in healthcare, we want to know number of doctors, number of nurses, other staff at the facility, full-time employee, part-time employee, contractors, and so on and so forth. That really gives us an idea of how the business is operating. And the reason why we ask certain questions is because generally we also want to ascertain who are the key contributors to the business when we talk about healthcare. Now, that might be different in other businesses because you might not be in a service-based business where the output is associated with the doctor or the practitioner. But for us, that is very, very important. As a consequence, employee count and what is the breakdown of the employees becomes very relevant and something that we want to know up front. Of course, point number 3 is kind of obvious, and that is financials. Depending on where you are in the world, there are different ways you can check financials. I mean, I've been in the US back in the day, and at the time, tax returns were the way to go, really. Sharing tax returns was the fastest way for ascertaining businesses, at least the small, medium ones. And now that we are in UAE, that I am in UAE, what we do is we collect a summary of the financials. If the company already has audit statements, that's so much better. The goal for us is to review the past 3 to 5 years, depending on the case, and then see what is the trajectory of the business. And again, I'm not sharing anything confidential here. It's just common practice. You might see if you're in the industry that a lot of people do require these things, and financials are one of the key elements of due diligence, and something that companies and sellers from that perspective should be prepared to provide early on. Now, in some cases, you might find out that, and I found out personally that some sellers don't want to provide that information early on because they feel like it's confidential. Now, that becomes a judgment call for you and us, whether we want to pursue the deal because we believe it's interesting enough or whether we want to pass on it. My point is, it's always worth to have a conversation because sometimes there's just a lack of understanding around the requirements. In many cases, we don't need any granular detail at this stage. We just need a summary of the financials, which enables us to get a better feeling of what the company is all about, how it has performed over years, and what are some of the key drivers of the revenue, and so on and so forth. So once that is clarified with the other side, what I found is that it's generally quite easy to get this initial financial information. Again, summary is what has worked for us very, very well. And at that stage, at this particular stage, you don't really need anything more than that, because if you want to dive into the number analysis, you can have your accounting firm get involved once due diligence starts. No point for you in getting granular at this point. That's just my perspective. I like to approach it more high level, so to speak. Then once we take care of these two technical aspects, what we want to do is talk about the owner situation. Since we are in small, medium-sized business buying, owners are a key component of most of these businesses. They either work in the business, they either are actively involved in the back-end management, or in some rare cases, they are absentee owners. The reason why we want to know what is the level of involvement of the owner is because that really enables us to understand, first, how the business operates, and two, what kind of offer we can present to this person, whether or not we need to keep him for some period of time in order to transition this business, or we can just give him a clear exit. My perspective is that in most cases for small businesses, it is always necessary to keep the owners for a certain amount of time. And so the question only becomes, how long are you going to keep this person? If it is mostly absentee, you might keep it less. If it is directly involved in a business, maybe he's also seeing people or working with clients, then you might need to keep him for a lot more. Now, that is a very important part of the initial assessment, because it also enables us as a company to better craft our initial offer letter, which is not the final commitment. It is the initial LOI, letter of intent. But having this kind of information also facilitates the execution of that letter, because we can really understand what is the owner looking to do and what is his level of involvement in this company. How can we transition that person who is currently interested in selling, and how we create a solution that works for both sides. And of course, this aspect is tied directly to my fifth point, which is why is the owner selling? So what are the motivations behind this sale? And this might sound like a stupid question to some extent, or not really relevant question, but in reality, it has a lot to do to the deal and the process that we follow. Because understanding what are the motivations of this person, of the small business owners who build this company from the ground up, really is going to tell us a lot about whether or not we can get a deal done. And so there are different reasons why companies go up for sale. Different owners might have different motivations. We want to identify core motivations and strong motivations that really are going to keep the owner incentivized in getting the transaction done. And the reason why I'm saying this is because in small business transactions, emotions play a huge role. It's not like a big corporate deal where everybody is thinking very logically and everybody is able to separate, emotions from business. In most cases, when you talk about small business purchases, the owners build this company on their own, and they consider it like a baby. As a consequence, they're going to be emotionally involved in the transaction. And if they don't have a strong enough motivation for selling it, they might pull out at any point in time. And of course, this is something that we want to avoid because it wastes time and resources, but also it wastes the other person's time. So we want to make sure we work with committed people because we are committed. And as a consequence, if we find the right motivation, that is the foundation of a deal, then we can step forward with confidence and work with this person to make a transaction happen. So let me summarize my 5 key questions that I always want to know when ascertaining an opportunity at least early stage. First is age of the business. Then we have employee count and breakdown of the employees. Again, very sector focused, but that's what we do in the healthcare field. Then financials, breakdown, a summary, it's fine. Then, of course, the owner discussion. Is he involved in the business? What is his level of involvement? And ultimately, what is his motivation for selling? These are my 5 key questions. They're very basic and they don't dive deeper into complex topics like how are you getting your customers, what kind of revenue streams you got, and how many traffic sources do you use to get your customers through the door. Those are all important things, don't get me wrong, but from my perspective and my personal experience, they are not necessary when you're making a preliminary assessment. They can come in afterwards once you understand, at least from a high level, if this opportunity is worth doing. And these 5 questions really enable me and my company Ulysses to go through transactions quickly and find out the ones that make the most sense for us. So I hope this was valuable to you. It provided some additional tips on how to approach an acquisition process, and I'll see you in the next one.